Morning, guys. It's the 15th of September. I'm Joe Neighbour from Signal Centre talking ball. Hope everybody's well. We're going to get stuck straight into it today because I've got a busy day ahead. So let's go with the latest headlines. So front and centre today is surging energy prices are beginning to grip Europe, leading to two energy suppliers that service more than 500,000 customers in the UK going out of business. We've had Utility Point and People's Energy announced on Tuesday that it would stop operating. The latest of the recent failures at challenger suppliers as power and gas prices climb to record highs. In Italy, the government is planning to use public funds to tackle soaring energy prices, adding to government measurements across Europe. So really is a bit of a concern, and obviously going to start really pinching on people's purse strings in the coming weeks and months if it isn't already. In terms of what's going on the coronavirus side of things, obviously that's not going away. Infections from animals carrying coronaviruses may infect hundreds of thousands of people a year. That's according to a study focusing on the ongoing threat of pandemics. Most infections which can amount to about 400,000 each year go unrecognised, but spillover can cause the next potential pandemic. So we're still very much in the midst of this one, but already we're assessing threats of potentially other ones going forward. In terms of what happened yesterday on the US inflation front, obviously that was the big number that everybody was watching out for at 1:30. The pace of consumer price rises in the US cooled in August as inflation prints came in lower than expected, which is obviously very welcome to us all. The figures are key for the Federal Reserve policymakers who will debate next week on how and when to begin tapering asset purchases, with a potential decision bound to affect markets globally. So obviously that will be the main focus point next week. In terms of what's going on the index front this morning, European stocks look set to defy the sell-off in US and Asia yesterday, where investors were rattled by weak Chinese economic data and also the second North Korean missile test in less than a week. So we have to wait and see whether or not that's going to escalate. This morning we had some inflation numbers out of the UK. That rose to 3.2% year on year in August, which is its highest level since 1997, as food prices caused a sharp rise in the overall price index. So lots to come today in terms of data as well, which we'll come on to shortly. But in the meantime, let's get stuck into some charts. So first up, going to look at the dollar index, always my starting point when it comes to FX markets. Yesterday, we posted a bit more indecision, but with quite a wide range. So 2 days previous, we saw a kind of shooting star-ish type candle. We made a new high, but closed pretty much where we opened. Yesterday, we made new lows below the lows of the previous session, but actually closed up on the day. But again, pretty close to where we actually started the day. So no real ground being made. We are still trading in this bullish channel in the short term, still looking for a retest on the upside at 93.43 and above that at 93.73. So for now, looking for higher prices, looking to buy dips on the dollar index. We are lower today, but only by 0.1% as it stands. If you look to the right of the screen, you'll see my watch list. There isn't really a whole lot that's getting a lot of attention this morning. It's actually quite muted in the FX space. The biggest gains at the moment coming from sterling off the back of those inflation numbers this morning. So let's take a quick look at euro dollar. Very similar, but obviously on the flip side of what we've just shown on the dollar index. Yesterday we did post higher prices, but we closed lower again on the session. And it looks like we're heading lower for me. So for me, it's a case of selling into rallies at the moment on Euro USD. Yes, we've bounced back a little bit today, but again, like the dollar index move, only up by 0.1% as it stands at the moment. Looking elsewhere, cable is off to a decent-ish start. So yesterday we were talking about whether or not this was actually going to close above this key resistance level at 138.91. Really big reversal yesterday. We did post a move above that level, couldn't hold on to it. An uptick in volume as well, notably on the selling, and we posted a bearish outside candle yesterday. We are higher today by 0.24% on the back of this inflation number this morning, as I mentioned, but clearly there is some resistance here at this trend line and also above that at the 138.91 level. So while we're below that on a closing basis, looks like lower prices are possible on that one going forward. Looking at some of the riskier assets, not a good day yesterday for Aussie Yen. Big impulsive down move, as you can see, engulfing all the previous day's session and making new lows. So just continuing to back our view on this one that lower prices will be seen. So eventually looking for a retest on the downside at 77.89. Looking at Aussie Dollar. Again, engulfing candle yesterday, not a good day for Aussie. Looks as though that's pushing lower. A bit of a recovery today by 0.16%, but for me, we're looking for opportunities to sell into that. So looking for lower prices. Euro GBP, not a lot yesterday. It was a little bit of a recovery, but we're selling off again today. Still expecting lower prices on that. That's pretty much it on the FX. As I said, it's quite muted at the moment. So let's get into Bitcoin, shall we? Let's have a look at what that's doing. So decent day posted yesterday, actually. Seems to be some support forming at around about the 42,830 level. Nice little bounce there in Bitcoin, which is obviously welcome for the Bitcoin bulls. The volume is declining a bit. So I think this is just really a consolidation at the moment. We are flat today, which is a pretty rare sight for Bitcoin, but obviously there's a long way to go between now and the close of the session. I think still the key issue here, we've broken this trend. We've got this big impulsive down move here. Maybe we'll see a retest of that somewhere up there. That will be the key test. If we can overcome that and that resistance level above at 54,511, then we can start thinking about retests of the all-time highs. On the downside, a break below this blue line that we have at 42,830 is likely to trigger a deeper correction. So a little bit in no man's land at the minute, but clearly while this support is holding, I think anybody trading Bitcoin on a short-term basis can be looking to buy dips to that kind of level. Okay, commodities. This is where it's really sort of getting quite interesting because obviously we're seeing these soaring energy prices across Europe. Oil broken out of this corrective channel to the upside, taking out the resistance levels at 69.18 to $70. For me, if we scroll out a bit further, we can clearly see the strength of the uptrend on oil from these lows back at the height of the pandemic. And looking more recently, I suppose, from the lows in November last year, I think what we formed here is a bullish flag. So for me, I'm looking for a continuation higher over the medium term. I don't see there being any real stopping of this at the moment, which is a concern, obviously, for those energy prices, which will start impacting people and potentially companies, as we've seen now in the UK. So we are pushing higher today, fourth consecutive day of gains. I know the day's not finished yet, but it's looking pretty solid so far. Looking for higher prices, initially up to 76.35. If we take out that previous high, then again looking for that continuation higher in oil. Not really much going on in gold. Yesterday we did see a little bit of a tick up, but it's still trading in a range for me. And I don't really anticipate anything changing at the moment in the very short term, in the next couple of days or so. On the upside, we need to break through these resistance levels at 1834 to 1845. I think if we can do that, then we can start looking for higher prices over the medium term. So as you can see, prices have been consolidating within this channel for quite some time now. The channel really sort of started back in August last year. So it's coming to a key point. I think a challenge here and a break, and then we are looking for higher prices, but it could take a little while yet. So holding off on gold at the moment from a short-term perspective, anyway. Let's take a quick look at the indices now. So I haven't got any sort of real energy prices, gas, etc., on my charts, but I probably have to start taking notice of those soon because clearly there could be some opportunities there for traders. Indices, let's get on with the Ftse 100. So that's pretty flat today. Posted a bit of a bounce yesterday off the back of finding support at this 69.92 level. But now it looks like we're going to be range bound, I think, between these kind of zones. Up to 7115, down to 6992. We've broken this trend, and this will be the key test of resistance, I think, here, an underside of this channel, this broken trend line, sorry. If this support level fails to hold, then the next key level on the downside is at 6,809. And also we're going to be marrying up with this long-term trend line, which comes in from the lows at the height of the pandemic in March last year. So for me, that'll be a real key test for this uptrend and whether or not dip buys are going to step in. I wouldn't be surprised if it does overshoot down to that 38.2% level. Again, I think that'll just be a healthy correction within the grand scheme of things, and I don't think dip buyers or people looking to get long of the UK stock market would be put off by that, and in fact would welcome it as an opportunity to pick up some value in some of the UK names. Let's take a look at DAX. Again, sort of quite familiar really. We've seen the break of trend here in a number of these markets, and the next move is really going to be the key one. So whether or not we're going to see a retest of the underside of this channel and an attempt at trying to break above these highs, or whether or not we're actually going to break down below these key supports at 15,450 on the DAX, and then down to this next key level at 15,045. If these levels are taken out, then potentially what we've done is formed some sort of top on the DAX, maybe in the short term, and we could see a corrective move to the downside take shape over the coming weeks and months. The 38.2% fib level is quite a way down, actually, down at 12,951. So it would be, quite an uncomfortable sell-off. Particularly if you're long in and around this region here, but ultimately I think it's just a way of creating new value for new participants to come into the market, and I don't think people would be put off by buying it down at those sorts of levels, so we'll have to wait and see. Onto the Nasdaq. So this is still holding above trend support for the time being. We are posting a little bit of strength today, and that is quite welcome because we've seen pretty much 6 days of negative price action on Nasdaq, but still it's holding above this trend line. This for me, this pinch point here is the key level at 15,181. If this level can hold and we can see buyers step in at this kind of region, then obviously this trend line is going to continue to maintain, and we can expect to see probably higher prices, even new all-time highs. But if this level does break, then it could prompt a corrective move lower down to these levels I've got on the chart of 14,066 down to 13,884. When it comes to tech, obviously, people love it, they want to be invested in it, but the valuations are astronomically high, and if there is any kind of unwinding, then potentially this is quite a fragile area of the market that could pick up quite quickly on the selling front. Yesterday we had the new release of the Apple gadgets, so we had the new iPhone and also the upgrades to the watch. From initial reports that I've read, they were quite underwhelming and showing that the sort of innovation levels at Apple are not maybe as well, not risky, but as innovative and as exciting as they once were. And we've seen prices pull back a little bit on that front. So let's take a quick look at the S&P, because this is obviously the broader index in the US, as I continue to say. The trend has been sort of tightening within this wedge phase. It's broken down to the downside. We saw a retest yesterday of this resistance at 4486, and the sellers stepped in, posting actually a bearish engulfing candle in the process. So not looking amazing for the S&P 500 at the moment. Next levels on the downside come in at 4352, and as you can see, you've got lots of trend lines drawn on here, horizontal support lines drawn on here, that I'd expect to do a pretty good job on any retest. But we have to wait and see how these things play out in due course. But maybe signs of a correction starting to take shape here in the US. So please be careful if you are long. Dow Jones, again, another market that has seen a break in trend. This is a narrower trend line actually that I've got drawn on this one. Doesn't go all the way back as far as the S&P one. But we've seen a break of trend. We are testing some key horizontal support at 34,564. Again, posted pretty nasty looking reversal candle really yesterday and engulfing all of the previous day's session. We are pretty flat today, only up by 0.04% on the futures. If we close below this key low from the 19th of August, then this could potentially spark a deeper correction on the Dow Jones down to this next support level, which comes in at 33,737. So keeping an eye on that today. I wouldn't be in a massive hurry to buy the dip on the Dow Jones today. I don't think. I think this is a pretty key level that traders will be watching. That's about it on the equities front. Obviously, it is not as comprehensive as usual because typically I'm joined by my colleague Steve, who will be back next Monday. So we'll do a deeper roundup on the charts and maybe look into some markets that you guys are also interested in too. So let's have a look at the gun to the head trade from yesterday. Just share this spreadsheet with you. So obviously in Steve's absence, I'm going at it alone. I've been calling this S&P lower, as we just talked about on the chart. And yesterday managed to make 28 ticks or 1.22 R on the session. So a welcome return. Since Steve's absence, I am dead flat actually. So across these 5 trades, haven't actually made or lost anything in Steve's absence, which is obviously a bit frustrating, but that's the way trading goes. So what am I going to do today? Well, I keep talking about this S&P move and the US moves and potentially them being on the verge of deeper correction. So this is my trade set up yesterday. Got short at 44.72. Again, probably too ambitious on the target, so I didn't get filled on that, but still managed a decent outcome nonetheless. So am I going to keep banging this drum? Well, I've got 2 in a row on this one, 2 winners. So why not, I guess. It saves me trawling through some other charts. I still think there is potential for a lower correction in these US markets. So I'm going to do it again. I'm going to sell it now at 44.50. I'm going to place a stop loss at 44.67, just above this sort of cluster of candles here, really. Give myself a little bit of protection and try and target the lower end of this declining trend line here. So I'm going to go in at 44.10 as a target today, looking for 2.5 R on the S&P, expecting a continuation lower on that one. So that's my gun for the head trade today. Okay, in terms of the day ahead, so numbers wise, we've got at 1:30 Canadian CPI prices rose 3.7% in July, so we'll be keeping an eye on that number as an indication as to whether or not inflation is increasing or decreasing. At 1:30, we also have the US Empire State Manufacturing Index. The index rose to 18.3% in August, so that's the level that we're looking for. And then at 3:30, we've got the US EIA crude inventories number coming off the back of a higher than expected reading last week. And obviously with energy prices soaring, as we mentioned, across Europe, this will be a well-watched number come 3:30 this afternoon. So that's it from me. Hopefully you enjoyed watching. I'll be back tomorrow. And until then, trade safe, everybody. Have a great day.